Alright guys, so over the last 30 days, I've been dollar cost averaging into M1 Finance. And it's really a test, an experiment to see what is better. Doing just a lump sum when you first start investing or actually doing dollar cost averaging? Well, in this whole entire video, we are going to explore what the results were after I dollar cost averaged it for 30 days. And you will actually find out whether M1 Finance is the platform for you or not, because there are pros and cons to both platform and strategy. So I am on my Roth IRA account, and you can see that I have a cash balance of $3,496. What I had before actually was $3,500, but I didn't know how M1 Finance worked. This auto invest, you have to be sure to know how this works. If you don't, then make sure to turn it off. But we're going to explain this auto invest in a little bit. Let's take a look at what happened. So this is where things screwed up for me. If you go to activity, you can see I deposited $3,500, and then I had that auto invest on, and they made a morning trade. So they basically just spent everything and bought Vanguard Total World Stock ETF, 10 of them for $102, which is about $1,020. And then they also bought SEHD, and they bought a quantity of 32 for $76, so that's about $2,432. So with the auto invest on, I didn't expect them to basically invest everything, and when we're dollar cost averaging, we just don't want to buy everything. So there's no way on M1 Finance to select, all right, you want to invest $50 at a time? No. If they're going to invest, they're going to invest them all. So it's been 7 days since we started our dollar cost averaging journey, so let's take a look at the results. When M1 Finance just made a lump sum purchase for us, it bought VT at an average of $102.57. With our dollar cost averaging strategy every day for the last 7 days, VT we bought at an average share price of $101.99. Now when it comes to SEHD, the lump sum from M1 Finance was $76.24. By doing DCA for the last 7 days, we brought that down to $76.17. So moral of the story for the past 7 days is that DCA actually works. Though the results that we have for the past 7 days is negligible. We made a difference of like 50 cents for VT and a difference of 7 cents for SHD. So let's keep this going and let's see what the results are going to be like in 30 days. And then the final days when we have the $3,500 fully invested. Alright guys, so as you can see on the screen, it is February 19th, which means that it is day 25 of me DCAing into M1 Finance for 25 days. On day 30, we'll do a full recap of whether DCA was better than the lump sum. But there's another thing. It's been 30 full days since I started on M1 Finance, and I started through Marco's Whiteboard Finance's M1 Finance affiliate link, and there's supposed to be a sign-on bonus for that, but I didn't get it. Now I talked to M1 Finance, and what they need is apparently they need for me to get a hold of Whiteboard Finance in order for him to send an email in to validate that I actually signed up with his link, which is a mess because as a big investing platform, I think they should have all these codes already directly linked to each other, but apparently they don't. So if you're thinking about signing on with M1 Finance, first make sure that the affiliate link that you're going to use in order to get your bonus is someone that you can actually reach, because I've tried to reach out to Whiteboard Finance, cannot get a hold of the guy whatsoever. I think I hope he's okay, but knock on wood, he's not dead, because I want my bonus. But in any case, if you haven't started with M1 Finance and you want to start, then my suggestion is use an affiliate link or of someone that you can actually reach, like my affiliate link. And you can reach me on X because I'm always on there. Aside from all that, guys, I want to give you an update on this 25th day of where we are at with our positions on SEHD and VT. So looking at our average share price for Schwab, US Dividend Equity, SEHD, I have 11.8 shares at average share price of $76.67, with a BT, Total World Stock, average share price has risen by $2. I have 3.66 shares at an average share price of $103.97. So from the looks of it, we're 25 days in. Lump sum looks to have been the better deal than dollar cost averaging. And I suspect that this is going to be the case on day 30 as well. All right, guys, so it's day 30 of our little DCA journey. So let's take a look look at how things change. So for Schwab SEHD, we have 13.8 shares and an average share price of $76.72. Now remember that when we did that lump sum, we got 32 shares of SEHD at an average share price of $76.24. So there's not much of a change here. Now VT, on the other hand, if you take a look at VT, we have 4.28 shares at the average share price of $104.20. Now this is a lot worse than our lump sum example, where we were able to get 10.23 shares at around $102. So what's the whole lesson of this DCA, dollar cost averaging, for the last 30 days? The lesson here is that if you're first starting out, lump sum is completely fine. If you're doing this for the long term, you could just put in all the money that you have in a lump sum and buy the shares that you need now. But if you want to dollar cost average every single day, that might be good, might be bad. It depends on both the ETF that you are investing in and the economic situation right now. Right now, as I'm investing, the market is going up, and generally over the long term, the market goes up over time. So instead of dollar cost averaging daily, it might have been better if I gave it a bit more time, like let's say a week. Every single week, every single 2 weeks, we do some investments. That might have been a better way to get better results with the dollar cost averaging that I did, but I went and dollar cost average every single day for the last 30 days. So I think the moral of the story is dollar cost averaging every single day might not be needed. Better to do dollar cost averaging maybe weekly or bi-weekly when you get paid, or even monthly. You might get better results that way. The only trouble is to stay consistent and actually do it. Now, the problem with ETFs and stocks is that they're not for everyone, but some of us who are risk adverse would like returns as well, and there's an easier way to earn yield without going through the ETF or the stock market, and that's through high yield savings account. If you want to learn more about that, check that video right here.